Making quick but bold decisions, being able to analyze trends at a fast pace. These are some of the qualities of what we call a day trader. Despite its risk, there is no reason not to consider it, especially if you are good at making bold decisions and analyzing trends. In this video, we will go over day trading and talk about ways to increase your success. To give a definition, day trading is a form of investment, almost always stocks, and selling it within the same day. These time frames can be within the open and close of the stock market, or in mere minutes for that matter. The time frame within minutes is known as scalping, and the time frames that last longer, which could be up to 1 to 2 weeks between buying and selling, are called short-term trades. Day traders search for small bumps in stock prices when the market is down. They observe when stock prices begin to peak and seize the opportunity, using different time frames depending on the situation. Some stock exchange platforms come with different types of settings, such as limit orders, where you can set the lowest price you are willing to buy and will automatically trigger when the threshold is met. My favorite setting by far is the stop limit, where you can set a limit when you are forced to sell. And this is a great way to guarantee profits from your interactions. Let's say you buy 5 shares of a stock for, let's say, $17, and after an hour the price goes up to $18. You can set a stop limit for $17.50, and even if the stock goes below 17 by the end of the day, your stop limit will still trigger, allowing you to receive guaranteed profits in that sense. Not all stock exchange platforms come with these advanced settings, so make sure you plan your actions based on the capabilities of your platform. Something I wanted to discuss is what type of accounts you should be using for day trading. So, personal account or a TFSA account. Both have their pros and cons. I will explain them now in a detailed manner. Using a personal account will result in your rewards being taxed, meaning you may not be getting the profits you desire. You need to be aware of this and take into account if you are using a personal. Tax-free savings, on the other hand, bypasses this issue, since you are not taxed when you sell your stocks. It's right there in the name. However, there is a limit to how much money you can put into your TFSA, $6,000 for starters. I would recommend this approach. Practice day trading with your TFSA, where your losses will not be as heavy as a personal account, since you won't be taxed, and use this time with your TFSA to get a feel of day trading, analyzing the stock trend patterns and playing with different settings. Get a feel of what day trading has to offer. If this works for you, switch to your personal, where you have no limits for how much money you can contribute to your account. You will be taxed, but the potential of growth is much higher than the TFSA. Hopefully this gave you an insight on day trading. Many people don't even look at this because of what everyone says. They consider it a form of gambling. You shouldn't listen to them. You need to make these decisions for yourself. It is always possible to make money with any form of investing. Consider them for yourself, do your own research by watching videos or reading, weigh the thoughts of others, but as opinions only.